Welcome to the start of the 2026 filing season, the first real tax drive of the Big Beautiful Tax Bill. This is where all the new provisions we have been talking about for months finally show up on your 2025 return. This year isn't about repeating all advice, it's about learning how to play in a new tax environment where the rules have shifted in favor of strategy, timing, and precision. If you are a high-income professional, business owner, investor, this episode is your roadmap for what's new, what changed, and how to stay ahead of the ISS filing season. Here, what we will cover in part one, we're going to talk about what changed under the Big Beautiful Tax Bill and how it impacts 2025 returns. Part two, hidden opportunities for high earners and business owners. Part three, the 90 days action plan for your 2025 filings. Part four, new habits top taxpayers are using to win under the new system. Part five, recap what strategies for the rest of 2026. Let's dive in. Let's look at part one, the Big Beautiful Tax Bill that was signed in July 2025 permanently reshaped the U.S. tax code. The individual rate that 10%, 12, 22, 24, 32, 35, and 37% are now locked in for good. That means no more guessing where the lower rate will expire after 2025. The threshold have also shifted upward. The top 37% brackets now begin around 626K for single, 751K 600 for joint filer, giving higher earner a little more breathing room before hitting the top tier. The standard deduction also saw a solid jump, roughly $15,750 for single, $31,500 for married couple filing jointly. That extra cushion reduces taxable income across the board, but strategic taxpayer can still beat the standard deduction by planning when and how to bunch itemized deductions. And after years of frustration, the SALT reduction cap finally changed. The limit increased from 10K to 40K for joint filers, which means 20K for single filers. For those in high tax states like California, New York, New Jersey, Hawaii, that's the real deduction coming back. This is especially powerful when combined with the pass-through entity tax or PT election, which allows businesses like S corporation or partnership to deduct state taxes at the entity level before incoming passes through to the owners. For many, it's now possible to reclaim deductions that were off limit for nearly a decade. Let's move on to part two, hidden opportunity for high earner and business owners. So here's where the Big Beautiful Tax Bill gets better and more interesting. So it permanently restores 100% bonus depreciation on property placed in service after January 19, 2025. That means business equipment, vehicles, computers, and even rental property improvements can be fully deducted in year one. Section 179 expensing also expanded. So the new limit is now 2.5 million with a phased out beginning at 4 million, double what many filers were used to. Let's put that into perspective. A logistics company in Dallas that buy $1.2 million in delivery vehicles this year can now deduct the entire cost immediately. That single move could save roughly $444,000 in federal taxes. A short-term rental investor in Maui who renovates a property for $350K can expend it all this year instead of depreciating it over 27 and a half years. The qualified business income or QBI deduction, the 20% pass-through deduction, was also made permanent. So a new inflation-adjusted minimum deduction of $400 was added, ensuring smaller operators still qualify. And there is more. For immediate expensing of research and software costs is back. No more 5-year amortization for R&D, just immediate write-off that reward innovation. For high earners, this is the most tax-efficient environment we have seen in over a decade. The more strategically you spend, the more wealth you preserve. Let's look at part three, the 90-day action plan for filing season success. Now let's talk about action because this quarter is where top taxpayers get ahead. So step one, close and reconcile your 2025 books. Your number from December 31st needs to be final now. If you are an S Corp or partnership, your March 15 deadline means you have less than 60 days to finalize depreciation, expense categorization, and owner reimbursement. Step 2, check your estimated payments. For high-income filer, the safe harbor remain 110% of your prior year total tax liability. Confirm your fourth quarter payment will make by January 15, 2026. So that's the key date that keeps you penalty free. Step 3, organize your documents. Start your digital tax form now. Create folder labeled 2025, W2, 1099 INT, 1099 DIV, K1, receipts. When your forms start arriving at the end of January, upload them immediately. Don't wait until March. Step 4, understand the 1099 rules for this year. So here's the clarification many people miss. You are filing your 25 taxes now in early 26, so the old threshold still applies. That means Form 1099 NEC and 1099 MIS reporting threshold remains 600 for tax year 2025. 1099K, which is third-party apps like PayPal and Venmo, revert to $200,000 and 200 transactions for 2025. The new 2,000 threshold for 1099 NEC and 1099 MIS will apply starting in payment made in 26 for 26 tax year. So if you pay contractor more than 600 in 2025, you still need to file those forms by January 31st, 26. Step 5, timing your filing. The IRS open e-filing in late January. If you expect a refund, file early once all your forms arrive. If you have K1 brokerage correction or multiple state filings, the smart move is to wait until late February or early March to avoid amended returns. Let's move on to our part 4, new habits of high-performing taxpayer in 2026. The best taxpayer that you are reacting. They are running tax strategy like a business. They keep separate bank accounts for personal, business, and rental activity. They schedule quarterly review with their CPA instead of waiting for filing season. And they document every deductible transaction with receipts, notes, and public statements. Take a look at these examples. A tax consultant in Miami earned $900K, shifted to monthly accountable plan reimbursement for mileage, home office, and phone use, saving nearly $14K in taxes. A real estate investor in Honolulu leveraged the expanded for $40,000 SALT cap to deduct property taxes across 2 high-value rentals, saving over $10,000 in one adjustment. So the pattern is clear. Organization and timing create tax savings that you can get from software alone. So part 5, recap and strategy for 26. Let's wrap up what this means for you. The Big Beautiful Tax Bill permanently lowered the risk of certain rate hikes and restored key deductions that reward smart planning. The 7 bracket system is permanent. The standard deduction and SALT cap both increase 100% bonus depreciation and full Section 178 expensing are back for good. QPI and R&D expensing was made permanent, and the 1099 rules are clarified to 600 for 2025, higher threshold starting 2026. This is the year to take control, get proactive, and build a system that makes next April stress-free. The Big Beautiful Tax Bill created the most opportunity we have seen in over a decade. The question isn't whether you will benefit, it's whether you will take advantage of it before the year gets away. The 2026 filing season has begun. The playbook is clear. Now it's time to execute. Thank you for watching. I'm Mia. I'll see you at the next video update.